Welcome to Shadow of Truth with your host, Dave Kranzler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org. And today is Wednesday, August the 12th, 2015. And we have a quick market update. China braces for impact. And then later today, we will be releasing a fantastic interview with John Embry. Thank you very much.
Yeah, what I thought was interesting about that was after the first devaluation the night before, they said that it was not. It was basically a one-time move, and then they went and devalued it again last night.
Well, isn't that how the game's played?
Yeah, pretty much. I think the market reaction yesterday was the market's way of saying this is the first of many. I think what my view on this it's a little bit different than what the common analysis is out there, which I think is pretty superficial. They're trying to make their exports more competitive. They're trying to prop up their collapsing stock and real estate market. Well, yeah, of course. I mean, that's kind of obvious stuff. But if you brush away the chaff, what's at the bottom of this thing? And I mean, when you look at this relative devaluation, I mean, right now, yesterday's deval, or I guess it's 2 days now, was at the time 1.9%. But really, it took the yuan versus the dollar back down to where it was in early March, or maybe a little bit lower than where it was in early March. So from early March's level, it was only about a little more than 0.5% devaluation. And in fact, on November 25th, the yuan was as high as 6.11 per dollar. And by March 3rd, it had declined to 6.27. That's the number of yuan that it takes to buy a dollar. That's the way to think about it. So when they say the yuan was devalued versus the dollar, it increases the number of yuan that it takes to buy a dollar. And that was a 2.7% move. So in the context of what occurred from November 2014 to early March, you basically have the yuan at about the same level on a relative basis. So it wasn't like this was some sort of drastic move. Now, is it a one-time or two-time thing, or is it going to be a continuous process? That remains to be seen.
I don't think they're going to stop.
Well, the markets don't think so either, and who knows? I don't know. It's definitely symbolic of the currency wars that are going on, and China just fired a huge shot across the bow of the U.S. and Europe, no question about it, and also Brazil, etc. But it's going to do a lot of things for China, and I think the most significant of which is it's China's acknowledgement that it's not just their economy that's starting to collapse. It's the global economy. I mean, everyone talks about the problems going on around the globe. Everyone in this country, anyway, everyone points their finger at China or at Europe or Japan. Oh, those areas or those countries are all in trouble. We're fine.
And they speak of them as if they're islands and not connected.
Right, exactly. And the truth of the matter is, the U.S. when you look at everything. When you put everything in perspective, the U.S. could, in terms of its problems, could be China times 2.
Well, with the amount of unfunded liabilities, unfunded debt, let's call it what it is, unfunded debt that we have on the books, I mean, who's to say that it's not triple what China's problems are or more?
Right, that's exactly right. Like, I was exchanging emails with someone earlier, and he's like, well, China's shadow banking system is 15 trillion. Oh, really? Okay. Do you know what the size of the U.S. shadow banking system is? Well, guess what? It's estimated to be at least 24 trillion. And the truth of the matter is, really, China started attempting to let the air out of its bubble about a year ago. If people remember, they raised interest rates, and they also and they also increased their bank reserve rates. And I think they've kind of moved them around up and down, but they've been trying to let the air out of their bubble. The U.S. has done nothing but pump up its bubble even more.
It's because that's all that they know. I mean, it's all that they've got. I mean, what
That's
else?
right. But
I mean, because if they raise interest rates, if the Federal Reserve raises interest rates, you and I both know, and our audience is well versed in the fact that everything is going to implode. Period. It's going to be game over, and they can't do it. So the only thing that they can do is create more digital dollars. That's all they can do.
right. That's right. And you do that both through printing money, but you also create digital dollars by printing debt certificates. Because when you issue debt, it behaves like currency until it gets paid back. And the U.S. never pays back its debt. So issuing debt is the same thing as issuing currency.
I
Now,
mean,
here's the interesting thing, and I haven't heard anyone talk about this anywhere, and that's if you compare the U.S. and the Chinese balance sheets. Now, China has, as I said, the theme for this is China's bracing for impact. And as I said, China has 3.6 trillion in foreign currency reserves. How much does the U.S. have? Has anyone bothered to look that up? 32 billion. It's down from about high 40s, maybe 6 to 9 months ago. I was shocked when I had seen it decline so much when I looked it up the other day. The other thing is we don't know how much gold China has. It certainly has a lot more than it disclosed the other day. And in total, including its population, it has a lot more gold.
yes.
Who knows? It may even, I just saw an estimate yesterday that China's population is holding 20,000 tons of gold. Now, who knows if that number is any good or not, but I would not be surprised if China has at least that much as well. Now, how much gold does the U.S. have? We don't know, but every indication has shown that most of the U.S. sovereign gold has either been hypothecated, leased out, or outright sold.
Yeah, I would be surprised if we have 1,000 tons. I really would.
That's right, and so probably even less. But the point here is that China has a massive financial cushion built into its system that the U.S. doesn't have, in the form of those reserve currencies and in the form of its gold. Now, the move that it just made was a move that increases the relative value of its foreign currencies, right?
Right.
And it also is going to increase the value of their gold. And not only that, it's going to stimulate a hell of a lot of gold buying in China, or a hell of a lot more.
Well,
And
I mean,
so,
didn't you say that the Shanghai Gold Exchange just moved like 300 tons a few days ago over the course of 3 days?
they
That's
moved.
what.
That's how much they had moved in, and they continued at about that same rate. In fact,
Geez.
2 days ago, they had moved another 90 tons in. And these numbers, you can go to the Shanghai Gold Exchange website and get these numbers. But the point here is, everyone looks at the withdrawals and says, "Oh, that's the number." Well, guess what? You can't withdraw gold unless you have it in the Shanghai Gold Exchange. So moving gold into the Shanghai Exchange is just as indicative of what's withdrawn.
Yeah, because it balances to zero, right?
Theoretically, yeah. But yeah, you have to have gold in there in order to withdraw it. And they're more open about reporting. They report on a daily basis how much gold is moved into the exchange.
And I just don't see how the U.S. can do anything to curtail what's happening. I mean, because right now, and correct me if I'm wrong, Dave, but with China doing what they've done, I mean that's crushing our what's remaining of our manufacturing here in the United States, right?
Well,
I mean,
that's a great that was I was going to get to that, and that's a great point, because essentially what I see this as is it serves a couple purposes for China. It's going to help. It's going to help let the air out of their bubble a little more slowly. Yeah, they have big bubbles over there, but no one puts them in the context of, okay, how do their bubbles compare to the U.S. financial asset bubbles? Our bubbles are bigger. And China is the world's largest importer and exporter now. So you're correct. What you basically have had is, for the last 20, 30 years, you've had the overall demand level for everything on a global basis highly inflated by money printing, low interest rates, basically central bank stimulus. You've bubbled up a global economic system that's larger than it should be. And what's happening now is you have a rapidly shrinking demand pie globally because people can't take on any more debt because the world's not willing to absorb more debt. That's why they've been printing money. But ultimately, you have a shrinking demand pie. I'm talking about real absolute demand, not inflation adjusted nominal, measured in value, which has inflation built into it. I'm talking about widgets. Let's call it demand for widgets worldwide. That pie is shrinking. And so what China's doing here by lowering the value of its currency relative to global currencies is it's essentially shoring up its exports to try and take advantage of that shrinking global pie before everyone else can. And it's also going to make imports into China more expensive. So it'll refocus some demand inside of China to more domestic sources. Do you see what I'm saying? Does that make sense?
Absolutely. I mean, and that's why I say that they're not going to stop. They're going to continue because that's just my theory on it. Based on what you were just saying, and based on the reality that you and I have been discussing for months now, as far as the global economy slowing down, and in certain spots, it's actually just falling off a cliff completely. And if they're going to, in order for China to let some of the air out of these bubbles and to be able to capture the shrinking market, like you said, why wouldn't they knock another percent off next month or another half point off, 6 weeks from now? Why wouldn't they?
Well, it's going to depend on how much the U.S. flinches in terms of flexing military might, and I think that's always a distinct possibility. But the way that I look at this, part of the reason why the U.S. people can't see this, the analysts and the pundits, et cetera, the talking heads, is that they're on this hallucination that the U.S. economy is still expanding. So they don't see the shrinking demand pie. The shrinking demand pie is global, including and especially in the U.S. We saw that with Macy's numbers. They missed their earnings badly, and they missed their revenue line badly. And it's not just specific to Macy's; it's all of retail is collapsing. We saw the inventory to sales number spike up. Well, analysts greeted that as, that's going to revise the GDP upward because industrial production is going to have to be revised upward. Well, yeah, but guess what? All of that inventory is just sitting on the shelves. It's not converted into value because it doesn't get sold. So my point here is that this is not just a currency war. That's obvious. That's the obvious part. Yeah, it is a currency war. It's a global race to zero so that every country can try and protect their relative trade position against every other country. But guess what? This is a de facto economic war, and China just fired a huge shot at the U.S. And that, as much as anything, is what this is about. And my point is that China is set up in a much better way to handle the impact of a significant global collapse.
How would Silk Road play into that, into their cushion, as far as the projects that they've got working throughout, most of Asia, and the partnership that they have with Russia, the fact that they're developing, everything in Africa, they're helping out Brazil where they can. They have their hand in so many pies around the world that seem to be different puzzle pieces to helping them to weather the storm. That is obviously coming. Or is that not, or would that not play into it?
Well, yeah. The development of the Silk Road is a very long-term project that's ultimately going to reinforce China's economic base, and it'll reinforce the economic base of the Eastern Hemisphere, essentially. So, yeah, that's more of a long-term thing. This what's happening now is more of an immediate. Hey, Houston, we have a problem. How are we going to address this? And it's almost like a game of prisoner's dilemma. And I always thought the game of prisoner's dilemma would be played amongst all the players sitting at the table holding U.S. debt. And no one has been selling it because when the first person indicates that they're a large seller of debt, it takes the bid away from the market, right?
Okay.
It's like screaming fire in a crowded theater. If everybody files out orderly and systematically, everyone's going to get out of the theater. But if someone yells fire and everyone rushes for the exits at first, the first couple people will get out, but the rest of the people will burn to death. And that's kind of like, that's how I was looking at the game of, hey, we got a problem. We own way too many treasuries. Well, the first person to start dumping is going to get out of some of their position, but then the market gets trashed and no one's going to get out. So I always thought that the global economic war would start when someone decided to dump their treasuries. But this is a more subtle version of it, because now all of a sudden you've got everyone sitting at the table with completely overvalued economic systems and completely overvalued financial markets and way too much manufacturing capacity. I mean, that's a global thing. Everyone points to China, but it's everywhere. And so what China has basically done is they've fired the first shot by starting to devalue their currency. And as I pointed out earlier, they're set up to weather the storm a hell of a lot better than the U.S. is.
As far as China's treasury holdings, aren't they diversifying those and putting those to use in other places like the Asian Infrastructure Investment Bank and the new bank, formerly the BRICS Development Bank? I mean, aren't they putting some of those treasuries into those entities? And wouldn't that dilute some of the impact that would have, or how does that play out?
I mean, yeah, I think it looks like they're trying to wash some of their treasuries through those, but those organizations weren't set up for that specific purpose.
No, I
I
understand that.
Yeah, I mean, I don't know. I mean, honestly, all of these other things like the Silk Road, the AIIB, the BRICS Bank, I think those are being set up for what happens in the aftermath of what's coming.
Okay.
And I think what this currency deval was designed to do was just to get the ball rolling on what's coming.
They're tired of waiting.
I just think they've decided it's time. I mean, it's their system is collapsing, but hey, guess what? So is the U.S. system, and I think they're saying, we've taken measures to try and cushion the blow a bit. Let's get this ball rolling.
I mean, would it be in their interest at all to go in and do like a 5% or 6%? I mean, something, just massive, some kind of massive deval, 10%, 8%.
That wouldn't be their style. I think they're trying to do this gradually. I mean, like I said, I think if they were to do something drastic, like dump half their treasuries overnight, or devalue their currency by 5%, I think it would create such rapid dislocation and destruction in the markets. I think that's where I think you'd see the U.S. start to flex its military muscle.
You think that all of this is that China reached a tipping point due to the fact that the IMF said, nah, we're not going to let you in the SDR at this point?
I mean, that could be part of the equation. That could have been part of the motivation for sure. It's not the primary motivation. To me, that's the easy explanation. And usually in these situations, the easy explanation is part of the mix, but it's not the primary explanation. And again, I circle back to the primary explanation being, it's firing a subtle shot of economic war, not just currency war, but it's also they're the first ones to take the step of bracing their system for the impact of a global depression, which is what I think is coming.
Seems to be right around the corner.
Exactly.
Well, we've got John Embry coming up in just a couple of hours here, Dave, so I need to get prepared for that, and let's pick up this conversation at that point in time, and I'll just talk to you then. How about that?
I think that sounds like a great idea. I'm looking forward to chatting with John again.
Yep, sounds good. All right, buddy. Well, I'll talk to you in just a bit.
Talk to you later.